Welcome back. Today is Saturday. We are on the 8th of October. Time check right now is 10:30 a.m. Eastern Standard Time, 10:30 p.m. Singapore Asia time. Welcome back. Really I feel very energized right now after really a great sleep throughout. I slept for about 12 hours straight. So the energy is back, and I think I want to cover quite substantially what happened over the past week and in preparation for next week. So let's take a look at who's joining us here for today. Welcome back, and you can post live on the live chat, and here we go. All right, the first post goes up. Wow, Jacqueline is faster than me. Yes, Jacqueline, I'm recovering very, very well. I think I'm fully recovered already. I believe so. I have not done my what we call the COVID test yet. Next week, I'm quite lined up on my activities, so I want to rest really well. I rested very well on Saturday. Tomorrow, one more day, one more round of rest. I think I'll be fine. Thank you very much. And I see Jeanette, Kinip, Kim San, John, and Eltin, Ryan. We got a new friend, Mondolozi. Nice to meet you. And Jeanette, yes, praise the Lord. Adeline, good to see you. So thank you very much for all of you for your well wishes. We receive all your messages on our email and our WhatsApp. We really appreciate it a lot. Well, there's a lot of work we got to do. It's coming up. Right now at the start of the Q4 October, and Q4 itself at October, November, December, and it's a most mind-boggling moment in time in history. Next month will be the midterm election, and finally, December will be the final month that we are aiming for the Santa Claus rally. All right, so let's check back on what we are about to achieve at this moment of the Q4. A few things I want to bring up to recollect what is our thinking at this moment. All right, so here we go. The first thing we want to take a look back at this. I framed this discussion back then in our last cozy live trading event, where I'm thinking about V-shaped recovery. Now, is it easier than what we seem to think about, or is tougher than anyone could believe out there? All right, so the premise start off with Emperor C, which is really coming up. There will be 8 days from now, 16th of October. He will be crowned as the emperor, and we pray hard that things will start to go back to normal in China. Now, this is really, really important because just as of yesterday, the United States came out with another list, or so-called blacklist, companies that they cannot do business with to kind of diminish the Chinese influence in the area of semiconductor chips. Now, that is like economic war eventually will lead to a full-blown, what we call actual war itself. Typically, it starts off that way. But, I think the Chinese are very resilient, and there's sufficient room, sufficient pie for us to go around. But never underestimate the hidden hands of the Americans, and that is the thesis I'm working on, which number one is a nuclear crisis, number two is the energy crisis, and the third one is I frame it as a Fed crisis, FED, all right? We're going to dive deeper into it. Just make sure over the weekend, we have sufficient time to rest, internalize, connect the dots. So October, we're looking at 13th of October, which is this week itself. That will be coming up Thursday. That will be the key inflation data. We are all looking at kind of dropping below, hitting the 7 percentage point finally, all right? So, but never know. Anything goes in the world of inflation in the US economy, all right? So fingers crossed. If all good, then 13 will be a big drop of the inflation data. Now, of course, there are many pundits in the marketplace right now talking about different ideologies. It's perfectly fine, but this is where, we're going to make sense on a Saturday evening, connecting the dots and having fun of our analysis, all right? So here we go. The first thing we're going to check back is this very important data that just came out, and let me just adjust it, and everyone got a fair chance to look at it together. All right, so here we go. September job gains affirm that the Fed has a long way to go in inflation fight. Now, this was published yesterday on a Friday. All right. Um, Typically, we are looking at a few metrics as kind of circling around inflation. You have jobs, you have retail, um, you have energy, and what is really the leading indicator for inflation? What is the real dynamic data that we should be looking at? Why is the Fed getting it all wrong all the time? Are they looking at things that we are not looking at, or where is the bridge? Is there even a bridge to begin with to bridge the gap? So all these are the thinking that goes behind, the thoughtful process. What should we really look at, and versus what we feel on the ground? But you see, these are very challenging questions right now because in our generation, none of us, I'm talking about really literally all of you watching, whether how old, how young you are, none of us has gone through an inflation crisis. And that's why it's always framed like it's a 40-year-old high inflation, right? So if you think about the previous high, that was like 40 years ago. And even like some of you may be like in the 70s or 80s, the previous high inflation, back then the backdrop was completely different. What do I mean by that? Information was not diffused at the same time. Most of, like 40 years ago, think about how information was diffused. It was through newspaper, through television, through radio, through magazines. And everyone has a certain lack of time by the time it's being delivered to the masses, all right? So the masses absorbing the information and at different time frames, the reaction is completely different. This time round in our generation, when we are hit with inflation, we are getting instant data. Social media, traditional mainstream media, and everyone try to be like stream live, right? You have Twitter, which is the fastest out there, going out with the latest information. Then you have your TikTok, your Facebook, LinkedIn, Twitter, and all kinds of platforms that everybody is tapping onto to kind of voice their opinion. So the way we deal with inflation 40 years ago versus the way we deal with inflation now, completely different ballgame because of information diffusion, how information is being spread through the masses. All right. So get this context correct. And then right now, compared to 40 years ago, we got even much more plateau of data sources. It's not a single source. Like, for example, in the past, technical analysis used to be extremely accurate. It's like the holy grail because every trader depended on technical analysis to plot the chart. So everybody look at the same thing, believe in when the blue line will cross the red line, it becomes a self-fulfilling prophecy. Now, not so. All right. So that is what I'm trying to say. Over time, the way we receive information and the way we interpret into information will change. And that's why this time round, all of us are virgins in inflation, literally virgins, first time, all right? And that's why it's very confusing to many people. Is it under control? Is it out of control? Is what is happening? What is the data that we should be looking at? So on this note, I kind of comfort myself on the fact that I don't have to go through past 40 years, reverse engineer every single data point just to prove a point. I don't have to do that. I just have to flow with the market. As the data comes in, interpret, connect the dots, and strengthen my analysis. I encourage you to do likewise. Don't give up. In fact, you surpass this period, this season of high inflation, you will know your next 40 years will be so easily traveled because you've gone through it already. You know the signals, all right? So this is the reason why we are going through together at this moment. I'm sticking my guns out. Stock market 100-day inspiration. My 100 days is coming up really, really soon. Today is day 87. I got 13 more days, and that's it. I finished this series of what we call the 100 Days of Stock Market Inspiration. And thereafter, I'll launch a new series which will reflect my thinking on energy crisis, nuclear crisis, and the Fed crisis. All right, I'm working on that out. And I want to announce it really, really big on 4th of November. Oh, I forgot to do this thing here. Pretty fun stuff right here. Ding! I don't know, does it show up right now? Oops. Okay, check this out. Wow, I got this cool thing moving left to right. The Spiking Alpha conference that's coming up. Please register at spiking.com/alpha. And this is the first time after more than 2.5 years, I've not met most of you collectively as my students in a real life environment, or what we call a theater. So I wanted to host it very much at the home of the Sovereign Wealth Fund, Temasek, here in Singapore, and that is at Capital Tower Building. All right. So we're going to have it right there. We're going to have great fun. We're going to take lots of photos. It's going to be such a big memento. The moment we are able to capture those pictures, anchor it down in the year of the inflation, that is going to be a picture that you're going to speak about in future to your children and your grandchildren. I already can see so far away. All right. So those of you who have not signed up yet, I encourage you go to spiking.com/alpha and you can join me live in person at the Spiking Alpha conference. All right. So let's come back. So we talk about information, our ability to access good data, dynamic data, or static data, and our ability to interpret the data tells it all. All right. So with this context, right now I frame it correctly. Then we dive in to look at this September job gains, affirm that the Fed has a long way to go in the inflation fight. All right. So first of all, every time anyone comes up with a headline like this, I'm very chill about it. I don't rush. I say everybody wants to have their fair share, because if you do not sensationalize your headline, you will not have the clicks, and CNBC probably won't put you up. That's how I think about it. All right, is everybody just trying to get certain clicks for their articles, and that's the reason why sometimes the headlines are written in a very sensational manner to capture our attention. All right, so here we go. 3 things to take away from non-farm payrolls report provided both assurance that the jobs market is strong and that Fed will have to do more to slow it down. So this box itself, is kind of a bit sadistic. Though sadistic is the right word to use. They need to make sure many people are jobless in order to bring inflation down. And that a strong job market means the Fed has to do even more to thumb it down. How could you have a government that's working against you? Have anyone asked this question? How could the heck that the government is working against you to get a great job, to be paid, so that you got disposable income to spend money? Right? This is the conundrum. This is what inflation is doing to the market right now. Everything that goes against your normal logic. All of us are working hard to get a nice paying job so that we can spend money, buy the things that we love for our loved ones. But here you go, you have a incumbent government that is ready to bring you down because of the so-called fight against inflation, which they misled, went out of control. They could have done it much earlier, but right now it's totally out of control. Now they have to do more to kill off the good jobs out there. Think about it, all right? And that's why I think my third crisis, the Fed crisis, I think I'm framing it correctly. It is triggered by the Fed. And there are groundswell right now that perhaps the Fed, they are also fallible. And, Wall Street has to do something about it, all right? So first thing about it, pretty interesting question for us to reflect. And, while I'm teaching away, I'm not like multitasking, right? Just feel free, go out there and make sure you're able to participate in the conversation. We have a live chat available to you, and just make sure you don't type nonsense out there, all right? Or else I'll ban you forever. Just make sure it's a very thoughtful process. We consider all viewpoints, okay? Second point, here we go. Worker pay rose 5% on year-over-year basis in September, down slightly from 5.2, but still indicative of an economy where the cost of living is surging. All right? So first we have the payrolls. Second, you have the cost of living. And all these are all the different metrics we have to kind of sink in. Don't get too stressed about whether you know inside out, outside in, doesn't matter. Just let it sink in, all right? Just be very chill about it, absorb. And then the third one is right over here. Futures pricing Friday pointed to an 82% chance of a 75 basis point move in November. So they are already front-running Fed, trying to predict the interest rate hike. We are left with two more windows. That is in November and in December. So in November, they continue with a 0.75, we'll have a collective interest rate of 3.75. That is damn painful, all right? We are more looking at a 3.5%, not 3.75. Because by the time it hit 3.75, December, you got one more room to go. If they hit with then they drop to a 5, then 3.75 plus 5 will hit a collective interest of 4.25. That will break the terminal rate of 4%, which everyone is trying to avoid right now. Okay? So just my red box there, quite a lot of things for us to think about, all right? So they are thinking like 0.75 followed by a 0.5, and straight away we will already hit the terminal rate more than 4%, you hit 4.25, and plus another one followed by the very strange date crossover between January and February, that they are predicting a 0.25, then we'll hit a 4.5%. Now, typically 4.5%, you add another 3.5% to determine the mortgage rate. 4.5 plus 3.5, 5 plus 3, that will 8% have to service your mortgage loan payment. Can you feel the pain right now? Woo-hoo-hoo! Zen. 4.5 plus 3.5, that's 8%. And that's why there's an R word going around right now. This R word is picking up really strong traction, and that's called recession. Everybody's really concerned about recession right now. And, I want to not talk about recession at this moment because I think it's a bit premature right now to think about it. Let me explain to you why. It's not that I'm ignoring this potential phenomena, because I want to see two data points. First is the Black Friday sales to give me a clearer indication how people feel about recession. Now, whether it's recession or some other thing, it's always a perception of the mass psychology of every trader and consumers out there. All right? So if the Black Friday sales turn out to be bad, that is an indication that, recession is real to the common man's life, and they're holding it back their spending. All right? They just want to make sure they hold more cash, preparing for the dark, stormy period of recession. So I want to use the Black Friday sales as an indicator. I also want to look at the Santa Claus rally in the stock market as another indicator before I finally make a decision that, okay, if this is recession to be, then let's fight it out all 2023, all the way to November 2024. Perhaps then we can have a change of a new president of United States of America. All right. So anything beyond 5th of November 2024 is all utter rubbish, because it boils down to who is the incumbent leader. And you can't predict who is the next president of the United States, because quite a number of different forces are at play today. Starting from how the heck Elon Musk decided to U-turn and buy up Twitter. And once Twitter goes alive under Elon Musk, he has a hand to shape the politics of America. He doesn't need to run to become the president of the United States. He just needs to be the kingmaker. And I think that's what I'm betting on him to do. It's really brilliant. He's the only American entrepreneur that can really go out there, have a conversation with the Chinese and the Russians. Think about it. Which other American would be able to go out there without triggering the anger of the Russians, of the Chinese, or the Indians, or whoever? I think only Elon Musk is able to do that. Nancy Pelosi, gone. Anyone in the top 10 leadership in the current administration, gone. They can't even talk to the Saudi Arabia. All right, so this is an interesting thing I'm thinking about also to formulate my thinking about Tesla, which tonight quite a lot of things to go through. So let me just check back. Are all of you okay with first or not? Let me see. Oh, are you okay? Let me know. Are you okay? Ding. And you guys know that when your teachers start talking about different dots to connect the dots means he's on the way to recovery already. And that means you are in trouble right now. You got to think a lot more. So I hope you guys are okay. I'm just really catching up on the past 1 week where I was down and out physically, but mentally I'm still very, very strong. It's just physically, it's just down and out. But the mental resilience is still there. So I hope you're able to handle so many things that I just covered. I'm not even done on my rest of my articles yet. I really enjoy typically the weekend session with you guys on YouTube the most, because I can really chill and think through things while the market is not out there. Because typically in a live market environment, I have to watch the market, see the prices, and then the next lineup on CNBC. I'm literally like doing multiple things at the same time. All right. So, but on a weekend, it's much more chill, relax. I can really think through clearly how I want to connect the dots. All right. So I hope you guys are fine with that. And there's a lot of things to think about already. And we are still on the first article only. Okay. So here we go. Just on the first 3 points we covered on the article, kind of get us started to think about, hey, quite a number of things for us to consider all the way until year-end rally, right? So here we go. All this, how I go about reading it, I don't dive in like deep, all right? Because again, some of you may choose a path to become an economist. Then you have to grind all this thing. I choose the path of an investor, and I want to make sure I know almost everything out there, not deep enough, but my strength is to connect the dots together. All right. So depends on the path that you choose. So no green light for a Fed change. This is what the market believes. There's no preference for Fed to cut the rates. That's what I meant by the no green light, all right? And that's the reason why they believe the Fed will push all the way to 4.5%. And finally, we're going to have an 8% mortgage interest rate service payment. So all this we thought through already. We walked through just now. Really, really nice. And, like every night I'm watching the different panelists, expert. This is just getting different ideas in. And of course, all of them also have their own thinking about individual stocks. So it's just good for us to compare that. And I don't like very anal about having to know everything deep. All right. So this is just pessimism on the street right now. And of course, with this kind of data point coming out, everyone is just feeling that way. All right. So just chill, relax. That's how I'm reading articles, exactly like this. I will see the things I need to see, and then by the time I'm finished, done. I'm done on the first article. Okay. So this first article will connect with the second article right now, which, another viewpoint from Michael Santoli, which is one of the most seasoned CNBC anchors out there. And here we go. It is telling us evaluating when and how this bear market will play out. What is the end game? So the end game is, are we leading through the path of Armageddon, end of the world? Right, I was just sharing this with a team from Malaysia the other day. Everyone say, "Oh, then we don't have to work already." No, it doesn't mean that way. If there's a war that's going to break out, which I kind of like to talk about this topic, not because I'm a military strategist or anything like that, but I'm still liable to call up by the Singapore Armed Forces. I'm still very young. So, those of you who are international audience, most of you wouldn't know the fact that in Singapore, men are liable for national service. 2 years of conscript army, and then followed by a 13-year cycle where they can call you back between 1 week to 1 month every year for military training, for full dress rehearsal and all that. And then after you are finished on a 13-year cycle, depending on your appointment in the military, right? So I kind of holding one one particular appointment where I'm not allowed to discharge until I'm past 50 years old. All right, so I'm liable to be called by the army in times of crisis. That means I have to go back with my military gear, carry a rifle, right? So that's something most people are not aware of. And this is the part where I feel strongly that within the next 2 years, we're going to see perhaps a breakout of a war. You cannot have everybody testing everybody's patient and nothing come out of it. Don't think so. You just need to have one guy make one mistake, or one rocket fell out of the flight path and landed on human beings. And that will be the start. All right. So in the event that happens, first of all, I don't think it will be near Singapore. I honestly don't think it will be near our country. It will be more like those sensitive areas like Taiwan, China, Ukraine, Europe, those kind of places. Then you have North Korea coming in between North Korea, South Korea, Japan. That region is also very sensitive. And I think the next most sensitive region for the next decade will be the Middle East. I think that's coming. All right. So that is part of my thinking on the energy crisis that's linked with the nuclear crisis, that's linked with the Fed crisis. So that area there will be very, very sensitive in the next 10 years. Gauging from how the Americans are looking at the OPEC Plus cartel. The moment they change their narrative, that's the start of the pain. And I think they have recently changed their narrative towards OPEC Plus members. That is going to be problematic. So it doesn't matter what I say over here. I'm not the prophet. I just sharing with you my viewpoints, things for you to think about. It's not going to happen today or tomorrow or next week or next month. But I think it's going to happen within the next 10 years. All right, so here we go. Second article, how we connect the dots. And that is how this bear market may end. What is the end game? I'm always asking this question. What's the end game of all this nonsense that's happening to us right now, right? So here we go. All this big topic about don't fight the Fed or the tape, and the worst stretch for bonds in years, in decades. Behavior can be held differently from one eye to next. All these are big words. And then they start talking about the pricing in Then they start looking at the S&P 500, which we'll take the lead from here and do it ourselves. Step 1. We're going to look at the Dow Jones index. And always we frame it at bottom left 2020, bottom right current status. And we start to draw this round numbered line, which is the 30,000 line, all right? And from there we drop. You say, holy moly, it has gone below 30,000 already. As of Friday, 29,296. And thereby we have a new box right here. We kind of been talking about it for some time, which is the 27,500 to the 30,000. How many more trigger events left? We have next Friday. On the 13th, it's not next Friday, it's on the next Thursday, all right? Next Thursday, we're going to have an inflation data release, and that might give us a little breather to kind of get out of the box, all right? Or the inflation data gone crazy and say, hey, we are still at 8% plus, then this guy will be sent down to break the floor of 27,500. Okay? So this is the range that we are looking at. But this range is a very, very absurd range. I want to use the word absurd range simply because of this. Look very clearly. 27,500 is the pre-pandemic level before the COVID-19 or the coronavirus or the Delta virus or the Omicron or the Wuhan virus brought it down back then in March 2020. Right? You can see this was the breakthrough, 27,500. And in the recovery, they also break above the 27,500. So this 27,500 is a very strong line. If for nonsensical reason that it's going to break below when we have already overcome COVID-19, then the crisis is bigger than COVID-19, and that crisis is called the inflation crisis. Okay? So this is the one everybody is really nervous about. If they break, all hell break loose. That means it's worse than how we started the COVID-19. All right, so take note of that. Then I'm going to move on to the second chart, S&P 500, without changing the time scale. Here we go. Boom. You realize it looks almost the same, right? But again, we have to draw the new line, which is right over here, 37,500 to 3,500. I try to use the Dow Jones index as the benchmark to draw my box for S&P 500, and that's the line I'm looking at. Now, some of you may be thinking, hey, teacher, maybe you should be looking at 3,005 to 3,000, this range. Yep. But right now, where's the reality of the price? The reality of the price is 3,639. It's not inside the box. Currently, the prices should be inside the box. That's thereby framing the discussion on 3,750 to 3,500. We don't want it to break 3,500, all right? Third one is Nasdaq 100. And this one, you can see is more tech heavy, all right? Already is testing the 11,000 line. So we are looking at a 12,000 to 11,000 line. It's going to break. And once it's break, oh my gosh, it will kind of want to test. The real test is about 8,008, which is around here, right? 8,008, which is around this range here. We don't want it to drop all the way here. This is like very bad already. Tech is already got hammered very badly. Okay? So we look at these three indices and we go back to here. Everybody have their thesis on it. We also have certain thoughts behind it. And then we go down. They start looking at this part here. This paragraph we need to read out to you. Yes, as noted here, the valuation setup remains rather top-heavy. The premium accrued in a mega cap growth boom not yet fully unwound. Apple and Microsoft are still near 22 times forward profits. Amazon and Tesla north of 40. Equal weight S&P 500 is now trading at 13.5. S&P 600 small cap is scraping multi-decade lows in price earnings, both in absolute and relative returns. That's how bad it is right over here, 0.6. Okay, now we've seen it already. We say, okay, we absorb it. Let's go down. All these are very, very big terminologies. Don't get overwhelmed about it. It's okay, just good to read. And then I want to go down to the bottom part. Is more panic needed? Okay. And I like the way they frame it. There's no single textbook manner with which bear markets end. Often there's a crescendo of panic reflected in wholesale liquidation of stocks and a desperate bid for downside protection that registers a vertical spike in the volatility index to a new high near or above 40. Then there are times when a combination of time and grinding price declines continues until selling dries up and investors lose interest. Both heading to June lows and late September, the selling intensity got toward historical washout condition. Things can always go further extreme, of course. The VIX has been spending extended stays above 30. Institutional equity exposure are near extreme lows, approaching levels of the COVID crash and before that, 2016 and 2011, according to Deutsche. All right. So we've seen all this. This is the bloodshed right now in the market. Take it, absorb it. It's okay. Continue. And then we have the front strut view coming in. And here we go. All right. The decline in margin debt in recent months has just touched the overdone threshold, according to Ned Davis research, which is building toward a contrarian bullish signal, though went deeper before major bear market lows were in 2002 and 2009. All right. So some of them who are betting on that contrarian view that we're going to have a strong bull rally, which I'm on the same camp as them. Typically, I think that if there's so much fear, then it takes one little spark to inject more participants coming back to the market, all right? Because everyone is so fearful right now. So this is a time where those contrarian bull will come in to be extremely greedy. Easier said than done, but this is a part where I'm waiting for 14th of November, where the insider trading data for Q3 will be published. All right, so that's another indicator we'll be looking at. And that's it, done for this second article. 3 more articles to go. And this is like me catching up for the week. Third article I want to complete is right here. And this is from Jim Cramer. He's saying that I'm urging you not to be a hero while the Fed battles inflation, right? So quite a number of stocks he's looking at. And of course, this is the lineup for next week earnings. We are at the tail end of the earnings. So also at the start of the next earnings season. So let me go down to the lineup. Wednesday, we're going to have PepsiCo coming up. All right. Again, everybody will look at it like a bellwether kind of a stock to tell us what's happening in the world. Then Thursday will be Delta and Domino's Pizza. So Domino's Pizza is something I'm keen to look at because of Bill Ackman. So far, he's the guy that is really staying strong in this bear market. All right. Then you go on down, boom, boom, boom. Friday, you have the start of the bank stocks. JP Morgan, Wells Fargo's, Morgan Stanley. All right. And that will reflect on how Warren Buffett is performing for his banking stocks. So all this good to look at and then done. And finally, the last article I want to share with you today is 2 key inflation readings next week will shape our investing game. And here we go. Many stocks to look at. Again, we go down. Dun, 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 dun. So we got trashed by the AMD recently on Friday. So let's take a look at AMD first. Hold on a minute. AMD. Check this out. This is a very, very big trash they gone through. Look at this big sell-off right here. Dropped to $60. Now, if we go and compare with the 2020, right over here, and we draw the line. Right, here we go. 2020 March, their worst is $50. Now they are approaching $50. They are at $58. All right. So that will kind of give you a feel. Okay, something is happening in the market. That's for AMD, and then we go on down. Here we go. All right. So these are the ones that we covered just now. Banking stocks, PepsiCo on Wednesday, Thursday. Thursday, we got one very important guy that's going to announce Taiwan Semiconductor, TSMC. All right. So this one, please make sure we really brace for it, because on Thursday itself, that will be the consumer price inflation data will be published at 8:30 a.m. Eastern Standard Time. All right. So we got two very important guys happening right here. And then on Friday, all the banking stocks will be announced again. Okay. How's that for Saturday night? Okay, so all of them are looking at different, price points to breach. And how do we go about navigating it? I want to take heed, but before we end off today's session, we take a look one more time at this great company and what exactly happened and what's going to happen. I want to spend more time thinking about this guy, right? And that's none other than Tesla. So Tesla took a big hit because of the decision to go ahead to buy Twitter. Yes, right now dropped to obscene level at 222. All right, just remember as 222. And if we were to draw this line at $200, and all this is after the stock split, right? But what is the significance of this $200? It went through this period back then. That was the period of the pandemic. In the middle of the pandemic, in the January of 2021, they did a blowout sales for Q4. We were trading on it back then in January. We were trading on 4 EVs. All of them all spiking up. Very easy to make money back then, all right? And that is a very, very strong point that, Tesla is the market leader for EVs. How could it gone down to that level of 200 today? I don't understand. Right? What has the company done fundamentally wrong? Don't get it. Other than the fact that, Elon Musk is very vocal about a lot of things with China, with Russia, with Taiwan. And the biggest thing right now is the acquisition of Twitter, right? So business-wise, they are doing fine. And how could it go back down to 200? So if $200 is that supposedly powerful indicator, then that will be the rock bottom price. Then from that point onwards, how much more can it go down? I mean, if it goes below 200, it really doesn't make sense to me anymore. It just doesn't make sense, all right? It's just nonsensical. What has Tesla done wrong? I keep asking, what have they done wrong? It's a great product. Any Tesla driver will tell you the same. It's a great product, all right? Great experience driving EVs. It's like, every time I go out with my Tesla, it's like so much fun. So at 223 on Monday, you may drop a little bit further. Depends on this whole play out with Twitter that's kind of messing up the whole stock price of Tesla. All right. So it must come to an end soon, which is this month. Then we look at it. What do you want to bet on? Do you want to bet on Tesla? And let's hear from one guy who's thinking along the line of thoughts I'm thinking about. And let's bring in Mr. Wonderful. He's saying that he's betting on Elon Musk amid Twitter drama. I think this guy is a Teflon. New word for all of us to learn tonight. Teflon. Okay, what exactly is a Teflon? All right, so if you look at it, this paragraph. I happen to have watched Musk forever, and I think this guy is Teflon man. And he can obviously multitask. Confirm, we are very sure about this, all right? I bet on him in this deal. By the time all this stuff is over, I think he's going to have a good outcome. Okay, what's the good outcome? So all this. So the absolute deadline for this month is 28th of October. The judge already set the date. Clean up all the mess by 28th. We're gonna have you gotta have to close the acquisition, all right? So let's read out this part here. O'Leary predicted that Musk will indeed assume ownership of Twitter once the dust settles, saying he thinks that Tesla CEO will improve the social media platform user experience substantially once in charge. Currently, Twitter is falling behind. Many users don't regularly post on it anymore, and with the risk of video content on other platforms is losing popularity. In fact, how bad is bad? It's a terrible company. I use the platform too, and I look at the metrics versus all the other social media companies, including TikTok and LinkedIn, Instagram and Facebook. It's the worst in terms of getting a message out. This is true. You know, I tested on Twitter. It's just not much traction. It's it's a different world. All right, and so you can look at it either a glass half empty or a glass half full. That's always my challenge to all my students. It's your choice. You can look at this negatively or you can look at this positively. But it's always like, you know, how is this going to impact the world with this purchase, right? So right now it's spoken so badly compared to other social media platforms. Then perhaps this is the part where, you know, with Elon Musk coming in, things will change for the better because it's really so rock bottom in a sense. So I always see this super rock bottom as a super good news because it cannot get worse than this already. It's the worst already. How worse do you want it to go? That means there's only one direction left, and that's for it to go up, become better. Okay? Now, this is the part that I connect the dot between Twitter and Tesla. All right, so let's read together. O'Leary says he thinks Musk is overpaying by 40% in the deal, but added that the inflated number might be worth it. By owning Twitter, Musk could use his influence and popularity on the platform to financially benefit his other companies like Tesla and SpaceX. And we know Musk is damn great at doing that, all right? And here's the point. We know for a certain fact that Tesla doesn't run ads. It's the only car company on earth that pays nothing on advertising. He advertised it on the back of Twitter and other social media platforms. Very few people get to own their own unregulated network. That is the hidden gem. But the challenge is this. It's not going to happen like within 1 quarter or 1 year. It takes time for him to kick the ass of the engineers at the Twitter and sort things out. All right? But I think he will do it pretty fast. I think about 1 year. And, you know, if you play out the timeline, is really magical because what is the time frame right now? We are midterm election month. All right? That means leading to the presidential election, there's 2 more years. 2023, 1 year. 2024, 11 months. That's coming to 2 full years, all right? Can you believe the timing is so perfect that he owns Twitter right now? That he has every opportunity to influence the outcome of the presidential election. so that he doesn't have to fight so many battles. And if he has a hand in determining the next president of United States of America through Twitter, that's it. So you are betting on him. First of all, step one, Tesla has there's nothing wrong with this bloody company other than the fact the stock price went down. All right. So I'm not too sure you can accept that or not, but I encourage you go and do a test drive, then you understand what I'm talking about. It's very difficult to understand Tesla until you drive the car. Especially all you petroleum car drivers out there. I can talk until the cow comes home. You won't understand Tesla until you drive the car. And drive in a way that you can experience that 3 seconds to 100 kilometers. Then you understand what we are talking about. Okay? So Tesla is a car, nothing wrong with it. Second, Twitter as a company, everything is wrong with it. But this is where, Elon Musk can come in to clean up the mess, to shake it up. And that's why I urge all of you, get serious with your Twitter account. Once the thing shake up, your Twitter account is going to be so valuable. All right? Then the third thing is the network effects of influencing the outcome of the presidential election, which is the thesis I'm working on to bet on Tesla, to bet on Elon Musk, and so many things to think about. Okay? And if you look at it, he has the backing of the number one crypto exchange of planet Earth, that's Binance. Binance pouring $500 million to support the acquisition of Twitter. That has been spoken about. That money has been reserved for this particular acquisition. So he's connected to Binance. He's connected to Dogecoin. And he's also connected to Bitcoin. All right. So just think about it. And that's enough for today. I hope you enjoyed today's session. Your teacher is almost back. When he's able to connect so many ideas together, means the mind is working fine. The body is just need to rest one more night. I think it will be perfectly fine. Next week, I got quite a lot of things lined up for next week itself. Oh my gosh, I got non-stop meetings. And of course, next week we have our cozy live monthly live trading event again. And something I'm excited about. And next Saturday, I'll be speaking in a big scale event. So quite a lot of things lined up, and I'm so grateful for your support. Make sure you share this video clip with your friends, with your colleagues. Get more people to join us on our YouTube live stream, and I hope you enjoy it tremendously. Thank you very much, and God bless you. Goodbye, everybody.